Okay, and then feel free to also unmute if you have a question and you're not very comfortable typing. Feel free to unmute and ask, or if you have anything to say. Okay, so moving on, we are saying that a receivables account is an account in which records are kept, in which records are kept of transactions involving all receivables. In total, I've elaborated this. The balance on the receivables control account at any time will be the total amount due to the business at that time from its receivables. You're welcome. And we're saying that the payables control account is an account in which records are kept of transactions involving all payables in total. Now, I've talked about people being demanded and people demanding. You have to, the concept of receivables and payables, you have to put it in the concept, or you have to understand it from the context of trading. A business, most of the businesses will exist to make profit, and so you find that maybe they are manufacturing and then they are selling off, or some of them will buy and then sell off at retail. Receivables and payables are in the context of trading. So if let's say you are selling land as a business, but your actual mode of business is maybe you sell genus, but maybe you have land as a business and you have sold that land to someone. It doesn't mean that you have to show that in your payables you have land that you're demanding. You have maybe 20 million worth of land that you're demanding. That will not be possible, because always remember how we arrive to the concept of payables and receivables is when we make either purchases or sales. For the case of sales, when we make sales, of course, we're ideally supposed to be receiving cash. Okay, and then we're supposed to be crediting our sales. So when we don't receive cash, we call those receivables. For purchases, when we buy purchases, when we buy stock for resale, or when we manufacture stock for resale, our inventory increases. Okay, and we are losing some cash because we have bought these purchases, and when we have not paid them, it becomes a liability. So don't come and show me that you have debited, you have bought land, and then you have a payable. No. Just because the word says payable doesn't mean that you actually need to, every money that you're supposed to be paying back should be a payable. That will be a liability that you have to pay back in one way or another, and you will not call it a payable. So keep that in mind, that the word payables and receivables or the control accounts are basically for example purposes. The control accounts will basically look at receivables and payables, but outside in practice, the control accounts may be much more. You may have to not only use payables and receivables. Okay, moving on. We're saying that although control accounts are used mainly in accounting for receivables and payables, they can also be kept for other items such as inventories, that is the stock that you have. For the stock, we will look at it when we start looking at financial statements, full financial statements. You find that we will have movements in stock. You find that for you have probably opening stock, and then you buy more stock, and then you have closing stock. So you basically even being able to find what the net amount of stock that you have, that in itself is a control account. So basically, a control account helps you make adjustments in different movements of similar items. Don't come and mix a payable and a receivable in the same account and call that a control account. There you're not being an accountant. So the first important idea we're saying is to remember, however, that a control account is an account which keeps a total record of a collective item, basically similar item, which in reality consists of many individual items. And it's an impersonal ledger account which will appear in the normal ledger. So it's in the nominal ledger, it's just a bit. If let's say we have a full ledger, that's a general ledger that has all types of transactions. The control account, which will probably be like receivables, and then payables will be a mini part of a whole. So where we have our total assets, we'll have our total, let's say we have a rent expense, we have depreciation, we have repairs and maintenance. All these are items that will be part of an nominal ledger. And just like these other items, receivables and payables will be also part of it. So contra accounts and personal accounts, you're saying that the personal accounts of individual customers of a business are kept in the receivables ledger, and the amount owed by each receivable will be a balance on the receivables personal account. The amount owed by the receivables together will be a balance on the receivables contra account. Like, for example, here, let me just finish this. At any time, the balance on the receivables contra account should be equal to the sum of the individual balances on the personal accounts in the receivables ledger. So without looking at this example first, if you come and tell me that you have your total receivables being 100,000, okay, and you have told me that you have maybe 5 people that you're demanding, I should be able to break down this 100,000 to relate and should be able to should be able to be equal to whatever figures you have put here. So if this person you are demanding them 10, and this person you are demanding them 20, and this person you are demanding them 30, that's 60, this person you are demanding them 20, and this person you are demanding them 20. It needs to all be equal to the 100,000 that you said is the total balance. Not if this person you are demanding them 15, and you're telling me that you have 100K as your total, that would be a lie, because that is a cumulative total of 95. And so that means that your contra account has a problem. Your total receivables are wrong. So you have to find out and ask yourself, why are they wrong? And so we'll look at things like, of course, it could be a difference that is brought about, but by maybe us having made a specific allowance or a specific allowance for bad debts receivable, or having written off a particular debt. So this example, we are saying, for example, a business has 3 trade accounts receivable. We have Mukasa owes 80,000, Baguma owes 310, and Muvidu owes 200. The debit balances on the various accounts, of course, would be the 80,000, the 300, and the 200. How much would be the total receivables in case this was our account? How much would be the total receivables? How much would be the total receivables?